In this video, I wanted to cover when, from a timing perspective, you need to file a final tax return for your business. So if you have a U.S. company, U.S. LLC, U.S. corporation, whatever it might be, if you close your business, you still have to file a tax return for that year, but you'll need to indicate that it's a final tax return for the short period that the entity actually existed during the calendar year. Okay? So, for example, if you have a business in Delaware, let's say it's a Delaware LLC that's a partnership. So over the years, you've been filing Form 1065, which is a partnership tax return, for each year the company existed. Then you decide, okay, we're closing the business, so you file articles of dissolution with the state of Delaware on October 1st, 2020. So the entity is no longer legally in existence on October 2nd, the next day, 2020. So when do you need to file the tax return under this fact pattern? Well, let's start with some of the basics, right? So the Form 1065 still has to be filed for 2020. No way around that, right? 2020, the company existed for, 9 months up until this date. You had operations, you had income, expenses, you need to file a return. And on that return, page 1, there is a checkbox where you indicate it's a final return. That communicates to the IRS that this is the last return I'm filing because the company was terminated on October 1st, 2020. Okay? So now, back to the central issue. When is the due date? Well, Form 1065 is normally due within 2.5 months following the close of the tax year. So generally, a partnership's default tax year is December 31st, the default year end is December 31st, right? So you run Jan 1 to December 31. It's a calendar year end. So the tax return is due by March 15th, which is 2.5 months following the close of the tax year. So how does the due date change when you have a closed entity? If the LLC is shut down on October 1st, the tax year ended on October 1, 2020, and you still have to apply this 2.5 month due date. So the tax return due date in this fact pattern will be 2.5 months following October 1st, 2020. So the due date for this 2020 tax return is now December 15th, 2020, and not March 15th, 2021. So the date is significantly moved up because you closed the entity on October 1. So think about this in a couple of other examples. What if you close an entity June 30th? You have 2.5 months following June 30th to file the tax return for that year. Now, what happens in most cases is you will just file an extension request because a lot of times the forms aren't even available and you just don't want to deal with it. So you still have to remember to file that extension request. Otherwise, you're looking at late filing penalties. And so this is what I see all too often is many companies forget that once that entity is closed, the tax year closes. And so the due date is no longer that calendar year end standard. It's going to be moved up to whatever the close of the tax year was, right? So the due date is no longer the standard March 15th due date. And so if you wait until, let's say, January or February to file that tax return, you might be well beyond the due date, right? If we go back to our example here, October 1, you got to get the return filed or the extension filed on or before December 15th. So if you waited till, say, January or February 2021, you've already missed it. So now if you file, you're looking at late filing penalties, and those for partnerships and S-corps are, a per partner or per shareholder fee times the number of months late. You don't want to be in that position. So very important to be mindful of these due dates so you don't, unnecessarily subject your company to late filing penalties, which are frankly completely unnecessary, as long as you just track the due dates. So that covers it for what I want to talk about and when to file these final returns. I mean, the takeaway again is make sure that the return is marked final, and then when you indicate the date the entity was closed, that you're filing within the prescribed due date timeline. So for Form 1065s and Form 1120S for S corporations, you got 2.5 months. following the close of the tax year. For corporate entities, so that's C corporate entities filing a Form 1120, you have 3.5 months following the close of the tax year. But in either scenario, you can certainly file an extension, which gives you another 6 months, which I always highly recommend doing anyway, even if you feel like you might be able to meet the deadline with an original filing. Always file an extension, just give you a bit of a buffer there because you just never know what could happen. So that covers it for this video. Thank you so much for watching. I hope you found that helpful. If you have any questions, please leave me a comment below. And of course, I look forward to seeing you again in the future. Thank you.